Hey everyone, just bringing you an update for BTC SOL, market cap, strength, and all the other various bits and pieces we go through. So let's start with liquidity. So on the 1 day, BTC looks pretty even. SOL definitely there's more bullish longs left to swipe on the 1 day. Areas sort of down to that 170, etc. If they were to take a little quick dip, and if they were to pump, up to sort of about 184. If we have a look at what it's like on a 7 day, in both cases, in the 7 day positions, you can see that longs have been piling in, whereas there hasn't been as many shorts getting open. So obviously, people are starting to feel like more confidence that it's going up. And when we get to the charts, the thing that's a little bit concerning is that's not really, what it's showing. There's actually signs that it's creating resistance and potentially looking for a rejection. So we'll have a look at that. And if we look at the 30-day, there's still quite a bit of 30-day shorts to take. So I suppose, like in summary, you can sort of see that right now. Things are quite even on Bitcoin. They're a little bit more bullish on SOL. However, if we were to say, hey, 30 days ago, well, 30 days ago, clearly everyone was quite bearish, and that's why there's a lot of liquidity up there to the top side. So maybe that means that that top side liquidity does get taken, and then a rollover and down. So let's have a look at the charts and just see how that's looking. So we'll start with strength for SOL and Bitcoin. So we're going to break out today, which is good, but we haven't really managed to push up through the inverse resistance. So although we're going to break out with a wick to the upside. Our interior trend will move, and we're going to open up on the underside of it. So this is sort of what I mean by it looks like there's going to be a push, but then if it closes in this manner, the push is just going to be straight into resistance. So you might end up coming up here to that 0.00156 level, hitting the trend as well as hitting the hold level up there, and then rejecting back down underneath the interior. So it's breaking trend, yes, but breaking trend, moving resistance, which is usually a bit of a sign of a pump and dump. So similar sort of thing. If we look at the 2-day close, it's going to break the trend, which again, good. It's creating a hold level here at 0.0001447. Now that's fine, but it also then gives it a target. So if this trend moves to there, we open on the underside of it, we reject off that trend, maybe push up through it a little bit, and then reject back down to that target. So it's just another time frame that's sort of showing bullishness on face value, but it's creating the means to actually have a dip. So, and when we look at our 5-day, we're going to get a interior trend on our 5-day for the first time, which is that, and it's also a range trend around this distribution range here. So we've got this range trend on the bottom here. We're still holding the normal trend on the 5-day. So this sort of says that whatever comes is probably going to be over and done within 5 days, because structurally this is going to open on the right side of that trend, that new trend. It will probably dip down into some kind of support based on what the other time frames are showing, but it should be over and done within 5 days, and then you should be able to head up and target these 0.0016 levels, which is where we've been looking at for a while. So we'll have a look at total market cap. Need more connections. Yeah, so total market cap is on the 1 day is just pushed into a hold level resistance. Doesn't look like it's breaking out of that. It hasn't got past the trend at the top. This candle actually too, it went up and then down, and then this is it coming back up again. So if this gets to that 357 level, it'll be touching that trend again, and that could reject. So it is a break, but it's a break with a really overextended candle that came all the way up through the downtrend. So these types of things normally create some form of retest. It'll probably reject off something in this area that it's roughly in now, if not that hold level that it's already in, and then come back down to find some kind of trend, which is back down here. So it's sort of another confluence, really, that sure, it'll be a break. When you have a break, it's going to target something to the upside, but it's going to target it from the wrong side of resistance, which means inevitably it ends up going back down again. And similar sort of thing on the 2-day close. It's well and truly extended up past its trend. It's creating this hold level in here at 345 trillion, and when that new candle opens, it's not really breaking the downtrend at all. There's actually that range trend in there, which is what it's hit as resistance. So it hasn't got over the top of that. In fact, it's perfect touch of that. So it hasn't got over the top of that. And so when the new candle opens, yeah, maybe it pushes up here, hits it one more time, but ultimately that looks like it's just going to, anything to the upside is probably just going to be a temporary little fake bounce, grab some liquidity, and then it looks like it's going to go down. And looking at the 3-day, which doesn't really close for a while, it's just sitting in between support and resistance, so it's not really offering much. Let's have a look at Bitcoin, see how that's looking. So it's pushing down off the back of some of these ranges. So it actually looks like it's, so you've got that range there. They're all about the same price, really, 117. So 117.17, 117.1, 117.019, they're all kind of about the same, apart from that one down there, which is that 116.43. So it's above that. That could offer support. It's not hard closed it, so it could also just fall through it. We're going to get this new trend today, so that there will appear out of nowhere. But again, it's not hard closed, so the next candle could come through all of that. Really, there's nothing in there really that's actually proper support until we get back to that 114 trend that's been running through there, and that's been dived a few times, as you can see. And then there's the range trend down here at about 113, and then we're into these other levels, the 111s and the 110s. That's again, that looks like it's tried to get up and through there, and it's failed to close up inside these upper ranges. So yeah, it's not looking, doesn't really have any potential to do much. It doesn't move the downtrend. Yeah, it's just, ultimately it just looks like it's pretty fake little bounce up and probably retrace. Let's just see what these bigger time frames show us. So the bigger time frames, they show we're pulling back from the hold level there at 117.5. We are going to create another hold level to the downside here, which is at 115. So nothing else really changes. Trend back down at 114. We do move this trend, so it goes to there. Now, because that trend is actually now shifting to the top side of that candle, and that candle's got a nice little wick on it, the next candle that opens will be under that. So that's actually more confluence, really, because you're generating a hold level here to be effectively either the thing that generates a move to a trend, or it's where a trend will target. We're going to open under support. Looks to me like we're probably just going to go up and hit that, and then come back down to here. So that would mean if we look at that on a lower time frame, be some kind of move after the day. So here's our daily open, and our trend will be here. So maybe one more push up into that 117 area, and then into that trend, and then if we push into that trend, we're probably going to push back down to the 115 area and see if it holds. It may not hold because it's a doji looking hold candle. It's potentially not going to hold. Then our trends are down below that. So yeah, this is actually just on the 1 hour there. We've just engulfed to the downside. So that's looking like it is trying to. It does actually look like it's trying to break down as it is. All this stuff is fractal. So when you look at something like this, there's our range trend that got created to the top side. There's our rejection. There's our engulfment, and it looks like that's already starting to work its way down. It's gonna want to target something like that hold level, which of course is no different to what you sort of see happening over here. We're moving a trend. We've got a hold level. If we push up after the new candle opens, we hit that trend, we're probably going to come back down to there. It's all the same sort of fractal stuff that's happening here right now on the lower time frame. Look and see what's next. So the 4-day will create hold level support at 115,707. It's still got resistance up there to go and hit. So and it hasn't hard closed the trends. If that pulls back too much by the, what have we got now? If that pulls back a little bit more before the end of the day, it could potentially open the next candle on the underside of trend, and it's already sort of tried to recover that once, but if it opens on the wrong side of trend, it'll be like the second time it's done it. And if it loses this area, then that's when we start to see the 110, 109, 108 levels come into play. So maybe down as far as, I don't think it would be 104, but maybe down as far as 104. You got range trends and stuff coming through that 110 area. So there's a lot of confidence for it to head there. And if we look at the 5-day, which closes today, so 5 days in rejection. It's on the wrong side of this range trend that's been running up here. So yeah, if it opens on the wrong side of that the second time, that's it. If it really can't get back over that, then it doesn't really have a lot of choice other than to reject down to the other range that's down here. So that gives you that backside bounce off that 110 area, or a potential frontside move down to 108. So yeah, that does look once again like it would open, and then if there was a push up into these areas and they rejected, then down it comes. It is opening on the appropriate side of that downtrend to actually be able to bounce, but the thing is that that trend is not broken until it's hard closed, and so open under 2 levels of resistance, maybe pushes up and then down. Could definitely happen based on that, particularly because one of these is a range trend and that one is as well, so they tend to move between each other. That's a lot of the stuff just looks like bullishness over the weekend and then a dump, really. Let's see. If we look at the 10-day close today, it's creating a hold level resistance at 117.818. So it's also under trend, and it's also looking like it's going to close in distribution. So if it does all of that, if it actually closes in distribution, then it is breaking the uptrend there. It's creating a hold level to reject off. The trend will move to there. So then the only positive thing about that is that it has the trend support. So it could come back to this and up to that, but it becomes a fight between effectively the hold level and the trend, and one of them is going to fail. So, and then it would have to come down and test these levels. These levels down here, they haven't really been retested properly since they were hard closed by these candles that are up here. So it's sort of more confluence around that 110, 108 area. And if we look at the 8-day, already has some resistance. So what's happening actually there? What's happening there on the 10-day is actually just solidifying what is already present on the 8-day. So the 8-day already has a hold level sitting there at 117.818. So when the price hits that, it should reject back to the trend and attempt to break the trend. So that's kind of just sitting in limbo there at the moment. That has also fallen back down under some of these trends from back down here. So yeah, and if it does lose that, the first levels of recovery are around 110. Maybe even this break level back here. Because yeah, this is the hard close candle. This next candle and every other candle thereafter did not retest that 106.475 area. So it just looks like it is setting up to potentially have a dip that just catches everybody by surprise, really. Yeah, it's the same thing. Break level, hard closed, not retested, 106.475. Above trend, it lost this one last time the candle closed. It sort of bounced off that area there at about 113. But that's another distribution close. So, and the next candle will open on the wrong side of the moved trend. So, and nothing's actually hard closed this trend coming through here. So really, if that gets down under that 116 mark in the next 11 days, I mean, it's an 11-day candle, so what this kind of thing is more likely to do is just dip all the way down, then bounce back up. But still, that really does not look that bullish. Because even if the next 11 days closes in accumulation, you can imagine that it has to close very particularly in a way without a wick and preferably with a hold level to actually create a range trend that then doesn't just reject the price. So it's a lot of good future potential from the way that is. And here we are. We look at our 20-day close. We haven't hard closed the trend. We're going to create that uptrend. The candle will likely open on it, so it's not really, whatever candle opens on that trend can't break that trend. If it pulls down a little bit more, like for example, if we end up at 100 in the sort of low 115s to mid 115s, then the next candle will open on the wrong side of that, which would be a bit worse. But if it actually opens on that trend and dives, there's your hold level right there at 110, so 110.228. So it's just more confluence. And then you've got that untested break level there, about 107. So, and those numbers are they're everywhere. And it looks like we're pulling back down to open under the 44-day trend from back in 2011. So it probably only has to come down another $400. So, I mean, if you close under 116.4, then you're going to be on the underside of that trend, and it would then probably act as resistance to send the price back down. There are a couple of targets here that, like 96, etc. Two targets for this time frame would be 106 and 96, but I don't know if you see 96. But it is kind of in the back of my mind because it just keeps popping up. It's almost like just waiting for some kind of unexpected news to come out. Expected, unexpected. All right, so let's have a look at SOL. So SOL is moved back up into that upper range, which is actually quite positive. Hasn't hard closed a candle up inside there yet, so ideally it'd be good if it stays over that 177 mark. The trend's going to move like that, and that's initially going to make it a little bit hard for it to continue up based on the 1-day time frame. So if the trend moves and it stays above some of these range breaks around that 176 area, then it could bounce the range break and try to push through the trend, or it's going to hit the trend and try to break the range break. But it's not ideal. Like you want to see break candles like that where there's no wick, and then it opens the next one on the other side and just keeps moving up. But it's not super bad either. Most of the confluence that exists on SOL sort of says it might revisit the 150s, which makes sense, I suppose, if Bitcoin dumps to 110. Store connections, too many tabs. The 2-day movers playing out. It's hit first couple of targets. It's still moving. The trend is up there at about 184, which is actually about where the liquidity maxes out. If we went back to our liquidity, it usually is. It's showing up to about 184. It's closing over the inverse. It's going to target something like the hold level, and maybe the trend gets in the way of it. That moves to there. At the moment, it's going to open a little bit too low and be on the wrong side of the trend. It is creating a new hold level at 169. So you might see this actually hit the trend, dip to 169, then try to push back up to complete its move. So you might end up with something like a 178 to 169 to 183 to 186. Or the other option is that it pushes up from the wrong side of the trend, hits the targets as resistance, and then rejects back under trend and goes all the way down to 169. And then by that point, there'll be something bigger probably in play. So, and here we are on our 4-day time frame. We're going to have a hold level at 172. We're still bouncing off the trend. We haven't got back into that break area there, so effectively we've stopped when we hit 179, and if we can't hard close over 179, then ultimately we're just going to keep having to go back to trends and keep trying to push up. So this is one of those first time frames that is showing some of those lower levels. So we've got so 152 down there. So we've had a backside bounce there. We've done our retest. So the 159 level is looking like it is pretty good support. But if we can't get back and hard close that 179 level and start to move up from there, then the next thing is going to be the 172 hold created today. And if that doesn't hold, then it's going to be down here to the 152.2 or 152.3 area. So, and we haven't even come back to this topside trend yet since it was created. And we have a break level there at 191, and really there's a lot of things to get through for that to continue up. Okay, and our 5-day close, we're going to get a new interior trend today. So this is, it's going to open in an okay position, so that's not so bad. But it's still under all the break levels, and they're not broken. So yeah, maybe it pushes up, tries to have a go at the 179 to 184 area again. But yeah, there's not really telling us too much. We're quite away. This interior trend's not broken, but we're also quite a way away from this this next support trend down here, which is in the 150s. Technically it's 146, I suppose, at the moment. But we've again got another hold level sitting there at 153. So I think all it takes for us to hit this hold level is for us to reject a trend, and we've got plenty there to reject. So whether it's this one out here or whether it's that one, the backside of that one up there. So if we start to see a push up, this time frame could potentially push up to 189, 190s. bit higher. But it has to hard close these break levels, or it's just going to drop back down and go to that hold level. Yeah, the 10-day hasn't broken the break level, hasn't hard closed it. So that's resistance at 184. This candle is not, thankfully, creating a resistance. But if this was to close the day under 176.975, then you actually do have another resistance level in here. And that will send it back, to the trend. So that's going to be 160s, 163 at a minimum. So yeah, that's kind of pretty close. Like, it only has to drop sort of 70 cents, and where it is now, close the day under 176.975, and then you would see the ability for it to reject off that and then come back down here. Because these uptrends, they're not broken. That candle would have to close. I mean, if we did get a really decent pump in the next 45 minutes and we closed over 181.4, that changes it, because then you're actually breaking your downtrend. But now, nope. And the 11-day is very similar. It needs to stay above 175.835. If it doesn't, it'll reject. It'll head back to trend. This is probably the time frame we don't really want to see a rejection on, because its hold level is like 144. So ideally don't want to see that one actually rejecting off anything. You want to see it break out, hard close these ranges before touching the trend, so that it doesn't have to dive all the way down to 144.5. So, and if we look at the 20-day, the 20-day move, the target for the 20-day move is 182.8. It's not quite finished yet. So the entry was around that 161 area. So that's still in play as along. So that gives a bit of confidence to the fact that, maybe we close the day, open the next one, have a bit of a move up, and then reject off something, because we've still got things like that 20-day long that need to complete. It's also it's not a break of downtrend, because it opened just on the trend. But that's some confidence that we might get that little move to the upside. And the 22-day is going to open the next candle under trend. If it rejects, it's got the level down there at 155 that it's going to want to go to. There's actually a range trend in here as well, so that's there. So it might open above that. If it pulls back to sort of 176-ish before closing, then it might end up being under that, in which case it will reject and come back down to 155. If it closes, say, where it is now, it could bounce off that, head up to the resistance here around that 184 mark, 185, and then roll over and come back down. So, because it wouldn't have hard closed it, it would have to literally stay up there for 22 days and stay in accumulation for it to not drop back down. So that's more confidence, really, if it closes where it is for a little pump and then induce a whole bunch of people to chase it and then dump back down to the 150s. So, and the untouched range trend for that one's all the way down here, sort of around 136, which hopefully it doesn't go all the way down there, but we don't know. Might get some FUD. And the 44-day is actually quite positive, really. The 44-day is, oh, there. That's the current trend. It's moving to there, which is good, and it's got 174 hold level being created. So what's the trend at? Let's look at this on a lower time frame. It's funny when you look at this stuff on a lower time frame and you can see how price just respects these levels before they actually exist. So, you know, to the cent, that's kind of what I refer to as polarity. It's when something that isn't support or resistance technically, because it hasn't closed, still acts like support or resistance prior to it officially closing. So that trend will move to around 184. And so if the new day opens and the price goes up first, it will reject from 184 back down to that 174. And that would then keep the ball moving really. And it would come down until it finds something else. So the lower levels of this range, because this is a big time frame, the lower levels of this are down into that 140 area. But it'll probably get picked up by something else before it got there. Move up. And our 55-day time frame is very positive. More confluence about a pullback. So it's going to close above the trend. We've never ever managed to hard close a candle above this trend. The day that we do is the day that SOL pumps, you know, and basically we'll take out these upper levels. But we really want to get in early on a lower time frame so that we can see that evolve rather than wait for that to evolve, because by the time it evolves, maybe it's already at 220. So, but what this time frame is showing is it's showing that we're above the trend. We are possibly going to pull back to that trend. If we retest the back of it, then we can head up and hit the 140s. Now, like I say, 55-day time frame. This can take a long time to play out. You could even have 55 days of downside candle just so that you can then actually create another trend to bounce off. So, all of these things are possible with these really high time frames. Maybe you have to spend 55 days down there. Everybody capitulates and decides SOL's never going to go anywhere, and then ping, you get a trend, it bounces that trend, and off it goes to 243. So that's a possibility. But it's positive to be opening above that. You can see sort of what happened there. The last time we opened above that, we sort of came back down, shot up, and took the all-time highs, and then we couldn't maintain that. You couldn't stay out there for 55 days, so it ended up basically losing that trend and coming down underneath it. But yeah, we might get that now, a second shot, going up. So we shall see. That's your other trend in play there, more localized. And so the candle's going to open on the right side of that, and it sort of creates this point down here where, because it's not real, it creates this point down here in those 150s. So if you start looking through all the confluences and all these different time frames and everything, they've all got hold levels, they've got trend retests, they've got basically everything's, and they've got trends above that will reject them back to those levels. So you've got everything sitting there that can send the price back to 152, 153. And if it does, it is retesting things like 55-day trends that have existed or have origins back in 2021. And so if it hits those from the correct side, which is what it looks like it's going to do, because of all those lower time frame retests, then you can really move into like a decent move up. And then it's about, can it sustain it? And if it can sustain it, you keep going. And if it can't sustain it, you dump back down again. So yeah, and I think lastly, our monthly's done. So basically our 156 to 175 long is complete. So that's hold level to first fib. And as you can see, it's rejecting just off the underside of that monthly trend. So this is where things like the importance of the 55-day, it's bigger than monthly. If we can bounce off the backside of a 55-day trend and push our way up through that monthly, it'll end up looking overextended like what you see here. But all it takes is for us to open one candle above that monthly and then maintain one more accumulation candle over that monthly, and then it's flipped that trend and it becomes support, and it's pretty close. That trend sits there at like 179-ish. So yeah, looking pretty good. So yeah, we'll see. I think my thing for the weekend is to watch out for if we do have a little pump and then maybe a dump down into the bigger supports, and then if it dumps down into those supports, then it's all about the longing really, and I'm starting to build a big long, and let's see if we can send it up. So, yeah, hopefully that gives you a bit of insights. Big one today because there was a lot. So yeah, take care and like and subscribe, and I'll come back to you if there's any decent updates that are worth talking about. Cheers, bye.